Hello everyone, it's Red with RedDragonLeo.com, and we did go up and hit our 1125 to 1130 target. As you can clearly see, we did hit that today. I was looking, as I said in the weekend video, I was actually looking for it to go down first and put in a B leg and then come back up and hit that target, but it looks like it's a much stronger tape than that. And I think this is all we're going to get for a B wave right here. That's it. I don't think there's going to be anything else. So that means our C wave is going to be much more powerful. So it means any crash is going to be delayed, because we're going to go probably up here and make a double top before it rolls over. There was no way of knowing how far this C wave was going to go, but had it rolled over from here and went down here first and hit anywhere in here, whatever, if it just any area here it would have hit, just went down and then attempted to go back up, it would have had a more difficult time and probably would have only went to about where it's at right now, this 1330 level. But I did suspect that that level would be filled mainly because of that little gap. However, in the back of my mind, we still have that old, from last week, we have an old fake print of 135.14 on the SPY. Well, 135.14 on the SPY, this would be approximately 134.40. So 135.14 is a slight higher high than this, just a slight pierce, not much. So it would be basically about 1350, essentially 1351, I guess. Would be approximately just about what it is. If you look at, let's see if we actually look at the SPY. Cobra's got that here. Okay. Well, as you can clearly see, that is 130. I think that the actual high that we hit there was 134. What was it, 80 or something like that? I'd have to go back and look exactly. But I'm looking it up here. Just give me a second here. Exactly what that actual high was. And intraday it was is this the right day? 5 days ago, 6 days ago, and I'm looking at the wrong thing here. Here we go. Okay, 134.72 was the high. So that was this date right here. So 135.14 is our fake print, which is 50 cents higher, about 5 points higher approximately than where we're at here with this current 1344. So about 1349 approximately. So since we did not go down first and we went back and to go back up, then now I suspect that this completed the B wave retracement. Very shallow, but you know, what do you expect here in this very heavily controlled market? Light volume just rules. So I expect it to go up tomorrow. It's a bullish tomorrow, so I can't see where it would not hit that double top tomorrow, and then maybe Wednesday pierce above it on a quick early morning pierce, and to take out any stops of people that go short. Just remember, if it hits this double top and it still looks like it's going up, it's a high strong possibility that they'll pierce and hit that fake print Wednesday morning. Is what I would suspect, if it goes up here and hits a double top and just gets pounced on, because they're going to let people get on board short right there at the double top, and they may back off a little, then they'll ram it right back up that last time on a Wednesday morning, and then I suspect they'll sell off. That's what I'm looking for. And you know, now that's assuming that we do not hit it tomorrow and just go ahead and pierce it tomorrow. Of course, if we hit it tomorrow and we go ahead and pierce it tomorrow, then Wednesday should just be a down day. You know, it should back away. That's assuming this fake print is the high that we've got, which, you know, no way of knowing exactly. Could be it could have been a real print, or I don't think it was, but anyway. So what that's going to be is exactly what I said I suspected it would be, where we'd go up here and then kind of go up like this, slowly work our way down, and that's what I expect to happen. So we're rising up here, we're above 0 here, between 0 and 2.5. I expect it to go up here to 5.0 area before it starts to roll over, as this kind of puts in a smaller hump, works its way down towards 0. And that would, at the same time it's doing that, the market would be going up. Of course, that's where you get the negative divergence, where the market goes one direction and the histogram towers is going the other, where it's then, you know, where you get negative or positive divergence. And then here on the 30-minute chart, well, you can clearly see on the 30-minute chart it has already went down and cycled back up. So now it's getting ready to go back up here and put a lower high in, so that there'll be negative divergence on that. And this should circle back up here and probably get up here to this 5.0 area, I'd suspect, before it's said and done. And this is a nice expanding wedge pattern here, which would certainly support, you know, this going up here and hitting 1349. I don't know if you'd probably have to draw that maybe a little closer on that trend line, but I think it could be 1349 if it gets up there and hits that, roughly. On the 15-minute chart back on this, you can clearly see it's pointing up into early tomorrow. So you've got the 15 pointing up, it's curling up. You've got a channel forming here. You have the 30-minute chart curling back up and pointing up. You got the 60 that's losing steam here, but it's still only on the MACDs, it's only at 0 and 2.5 area, so it could easily pop on up here to 5.0 and maybe even higher. It's quite possible. So it looks like we're on the second course there of going and hitting that fake print after all. I wasn't sure. I thought maybe we wouldn't, that we'd go down and then back up and then we'd sell off, but this is just probably going to delay it. That doesn't mean that the market still couldn't tank this Friday. I mean, who knows, with the jobs data, the non-farm payrolls that are out Friday. If we go up here tomorrow, Tuesday, and actually hit that fake print, back off a little into Wednesday, or even just hit the double top, back off a little into Tuesday, then Wednesday hit that print, and then back off after that, and then Thursday maybe have some little bit of selling, and then Friday really tank. So that's just what it's lining up to be, and whether it works out that way or not, who knows? Anyone knows. So it's anybody's game. So we can clearly see on the daily chart, it is kind of curling back up, wanting to curl back up, but I don't think it's going to curl back up here and put in some, you know, big histogram tower of positive, above the 0 mark. I don't think that's going to happen. If we get back up here to 0 tomorrow, which I doubt, I think it's just going to be a real narrow one, still below 0. I think it's going to be in this area here as it moves up, and then I think it's just going to go flat come Wednesday, and then Thursday, Friday, dip back down. It's hard to tell on these little histogram tower bars, but just because they are looking like they're curling back up, I don't buy it. I don't think we're going up past, this double top with the slight pierce above it. As I said in the video, that was possible on the weekend video. Again, looking here at the weeklies, you can clearly see we do not have a crossover yet, but we are getting close. It is working its way down here, and at any moment this thing can fall off the cliff, any moment. And so we are in crash territory. Maybe it doesn't happen this week. I'd be shocked at non-farm payrolls and information. I know they manipulate, I know they control all that stuff, but that's also something they can use to plan any crash. I mean, that's what they do. They plan it. They release those news events when they're ready to tank the market, and I think they're ready to tank it. I really do. QE2 is pretty much already factored in to this market. I don't think that we're going to have a QE3 yet at any point. There's not much talk of it, but you know, who knows? Bernanke, I think, is going to be talking some tomorrow, but you know, if we print QE3, it's going to devalue the dollar more, and it will destroy it even more, and that is going to have a negative outlook on the market, because the market at some point, and I believe we're getting close to that point now, that the market will go down with the dollar. As the dollar goes down, the market will go down, and because the market will look at it as a negative, because a dollar that's worth less will end up causing Americans to pay more for goods and services, and it will break them, and they will end up losing money because they won't make as much profit selling goods and services. So in any way you spin it, there is a critical point that the dollar and the market will no longer trade in inverse of each other. They'll go down together and go up together. It's what will happen. And I think we're getting close to that point now, where the dollar goes one direction and the market goes the same. So as for oil, we did get a little bit of a pullback. It's kind of really a flat day overall for oil, a little bit of pullback. But just remember, what Lindsey Williams said about it, over the course of this coming year, it's going up. So if anybody's got long term, you want to stay in something for long term over the course of the year, you can almost guarantee you're going to hit $150, $200 a barrel for oil. So it's a great investment for your 401k plans. Looking here at the VIX, we hit a gap window, and this would imply that we actually pierced through gap window a little bit on the tail here, just looking at from one tail to the other. So we very well could fall down here again and fill this gap. It very well could happen tomorrow if we have a rally up there and hit that double top. Now, if for some reason we do not get up there tomorrow, if tomorrow being the first day of March, when there's fresh money coming in, and we still do not manage to get up there, I would certainly be surprised. And if it's a weak tape, that may very well, especially if you see some volume come into this, it may very well signal that the top is already in and we won't go up there and retest it. So do keep that in mind if we see this weakening like this. But from what these charts are saying, they only work for the bulls, they don't work for the bears, so just keep remembering that. So when I make bullish calls like I'm doing today, they do tend to work out because the gangsters are bulls, I guess. I don't know. They're just manipulators. So as you can see, again, everything is pointing to pretty much an update for the bulls tomorrow. If they fail to get up here and hit a double top and pierce it, remember, they don't have to pierce it today. They can back off and pierce it Wednesday morning on a gap up. So that's about all I can see for now, but we are in crash territory, folks. Make no mistake about it. It could happen anytime. It tends to happen on Fridays and Mondays. So this Friday's a good time period to look out for it. So I'm certainly expecting some selling. I don't know how much, but if it's a crash, and when I say crash, I mean a 500 point down day or 1,000 point down day, something like that on the Dow. That's 400 or 500 points is a mini crash, but that's okay. I'm still calling that a crash. I'm not looking for 2,000 points in one day, folks, but it's a start. 500, 400, something like that. Okay, gang, that is it. I will see you on the blog tomorrow.